Hello and welcome to the KE Report. Chad and Corey here as your host, and today we're getting an update on West Red Lake Gold Mines. West Red Lake Gold Mines is traded on the TSX.V under the ticker WRLG and on the OTCQB under the ticker WRLGF. And we are joined today with the Vice President of Communications for West Red Lake Gold, Gwen Preston. Gwen, it's great to get you back on the show, as always. And we've had a flurry of questions come in about the ramp-up process at your Madsen Mine in the Red Lake District, and it's an exciting time for the company. You know, we've had you on throughout the year talking about different milestones, the underground development, the connection drift, the bulk sample, and over the last couple of months, Shane, the CEO, has put out a couple of updates to the market just talking about the ramp-up process. You have put out some short videos, which I recommend people check out, that give people a nice synopsis when news comes out. But we get so many questions, Gwen, about what is this process? When are they going to start making money? Are they producing gold? Are they in production? When is commercial production? So it'd be nice if you laid out the roadmap, the pathway to commercial production, which I think is possibly still on track for the end of the year or beginning of next year. But this interim period where you're feeding ore into the mill and you're producing, what is this ramp up process like, and what's the roadmap, Gwen?
Absolutely. Great to chat with you guys again and to be back on the show. Yeah, ramp up is a limbo status. It's in between, right? It's a hybrid, I should say. You've started things up, you're working your way through to commercial production, but you're just not quite there yet. And I think the best description of why ramp up is part of the process is just that mines are big, complicated, multifaceted things, and you need to make sure that all of those things are brought up to speed, and then your ability to maintain them at that speed for, a consistent period of time, that you test and demonstrate that before you say, okay, bam, we are doing this, we are ready to do this consistently going forward. And so depending on the mine, what a company wants to or feels they need to achieve during ramp up, it varies. It depends on how many pits they're trying to mine. Is it one? Is it multiple? Like, is there infrastructure that's still being built? How many faces underground? How much development's needed? Like, there's lots of different things that could be focuses during a ramp up period. So for us at Madsen, it comes down to our mill is working really well. We don't really need to ramp up the mill in any sense. You've been seeing in our monthly updates that we're churning through 650 tons a day. The mill has been pushed up to 800 tons per day, to demonstrate that we can do that a bunch of times. So the mill kind of gets a check mark. There are moments where, just like in any piece of machinery, you need to pause, fix something, whatever. That's just milling for you. But the mill is sort of got a check mark against it. Our ramp up is really about two things. One of them is increasing the number of tons that we're pulling out of the mine every day. And so that requires that we create access to all the mining areas that we need for next week, and then set ourselves up for next month and for next quarter, right? So that's part of ramp up. We were obviously underground before we started into ramp up. We were doing the bulk sample, but that was a reasonably constrained exercise focused on the areas of the bulk sample. Now our scope is wider. We need to get ourselves set up, like I say, for mining next week, next month, and next year. It's all in our very detailed mine plan, which literally says what meters need to be developed and what stopes need to be blasted every day for the next 12 months. And so we just need to execute on that. And those who are in the company and see that ramp up plan, see that growth in the mine as you get access to more areas. And then you have the ability that gives you the ability to, and the confidence that you can just pull that mineralization out of the ground, that tonnage every day. So that's the big part of ramp up for us, is just increasing the amount that you pull out. Getting a few more pieces of equipment for us is also part of that. We're still waiting on a few trucks, which just, of course, help us move more tons. Also, like I said, different mines have different components to their ramp up. So equipment availability is one of our components. And then getting that equipment in place and operating stably. So operational stability is one of the things that we really want to see before we say this is how we're doing it. And we mentioned in our last monthly update 2 projects that are underway at the mine site. One is getting the shaft going, was always part of the plan. And so now we're waiting for the scrolls and the rope so that we can get that old shaft going again. That for us is an important part of achieving operational stability, just like adding more trucks. It's the ability to move tons out of the mine. And then that cemented rock fill batch plant. Is that a long enough name for you? So that we can crush up and then turn into cemented rock fill some of our waste rock, so we can just keep it underground in some of those large historic voids that happen to still be void. Again, that's about operational stability and not having to move as much material up and out of the mine. So those are a few of the things that we want to still check off before we declare that we're rocking and rolling. The other factor that I've been talking to people about is, and this gets into geology, which I'm sure we'll chat about in a moment, but I've been talking a lot about how our mine plan was done on a very low gold price, which meant that it really focused on only the highest grade mineralization. I've talked to you two and lots of people about how our final mine design at site is not based on a really low gold price. It's the long-term consensus gold price of like $2,350 gold, using a gold price that's quite a few $100s above the gold price that was used in that pre-feasibility study mine plan. Means that we mine more of the halo mineralization that's around the super high grade parts that we're focused on in the pre-feasibility study. There's two things there as you get to final mine design that therefore will determine what the grade is that comes out of the mine. One of them is, sure, you're going to mine some more of the halo mineralization, which is adding lower grade material to your mine plan. But the other big thing that you're doing before you do that final mine design is you're tightening up the drill hole spacing. And so when you tighten up the drill hole spacing from 20 meters to 7 meters, you often encounter lenses of high grade gold that the 20-meter spaced drilling didn't see. So in a sense, you add both high grade and low grade to your final mine design. Low grade in the halo, high grade in finding the additional lenses. One of the really important factors of commercial production is that you say, okay, we're in commercial production, and then you provide guidance, right? You tell the market, this is how many tons we're going to mine over the next 12 months. This is the grade we're going to mine it at. This, therefore, is how many ounces we're going to produce, and this is the cost that we're going to produce it at. In order to be able to make those statements accurately and confidently, on the grade side, we need a little bit more data on how that low grade, high grade double input plays out. And so we're gathering that data each month, and we want a few more months of that data before we want to say what the gold grade is in our guidance. There were so many G's in that sentence that it sounded funny in my head before I said it. Gold grade in guidance. So we're gathering more data. I mean, like I say, we like the fact that there's both inputs. The halo mineralization is economic in and of itself because that's the nature of mine design, and adding the high grade keeps the grade up, even though we're adding more of the halo mineralization. And then, of course, I mentioned a few things there that you say in your guidance. You talk about grade, tonnage, ounces produced, and cost. In order to be able to give good guidance on cost, you need that operational stability, right? You need to have all the trucks in play. You need to have the shaft going. You need to have the batch plant going. So those are the things that we're running as fast as we can, keeping this machine operating as smoothly as we can while also incorporating these additional things. That's the phase that we're at. And yes, we are gunning to get to commercial production. I would say round about the turn of the year. That's our vision. And we're working to put the pieces in place to get there.
So Gwen, this whole concept of commercial production, a lot of people, whether right or wrong, associate that with simply profitability at the mine. And in July, you had 3 gold pours, poured just under, let's say, 4,000 ounces of gold. You generated $12 million in revenue. I think a lot of people are still wondering, how are you doing cash-wise? How is this build-out taking cash? How are you adding cash back in with these gold pours? Really, what can you tell us about how the company stands capital-wise to continue to move through to commercial production, whether it is this year or early next year?
Yes, making 12 million US in a month, that's a big, nice number. And if our all-in sustaining cost were so high that we weren't making money, that would be a red flag for management. So we obviously don't make statements on profitability before we're in commercial production, but July was a good month. July felt good in the office. It was a step forward on our path towards commercial production. As for, we've remained in the position that we have the capital that we need to get this mine up and running. It's a month-by-month thing. You always are aware of the possibility of something going wrong, but we believe that we have the capital that we need, especially after a month like July. And then, you keep pushing forward to have more months like that. For us, I didn't talk about profitability as one of our criteria for commercial production. We certainly are not waiting for profitability to declare commercial production. As you achieve the things that I outlined there, getting the shaft going, getting the batch plant going underground, adding the trucks, those things help stabilize and control your costs. So in general, during a ramp up of any gold mine, your costs are gradually coming down as your production is going up. And that's what gets you into the level of profitability where you're like, this is why we're here, right? And so it's not about just getting to profitable before you declare. It's about getting to profitable enough and stable enough and getting to the point that you said you would get to. That's really what the difference is.
Okay. So it sounds like once you check off some of those boxes with the shaft, with the equipment, the trucks that are coming, with the paste and backfill plant and all of those different pieces, you're going to optimize things. Your efficiencies will improve. You'll have more stopes opened up. You'll have more ore going through the mill. And at these prices, obviously, we should note that $3,300 gold is a lot higher than $2,400 long-term consensus. So the higher gold price, also a nice kicker. So a lot going on with the operations, the underground. We've talked in the past, Gwen, about the team and all the staff in place and the camps there, and everything's humming right along. But you brought up an interesting point about understanding the deposit better and finding some of those high-grade zones. And I just want to do a callback. We were talking about this off mic. We didn't actually get you on in May to talk about the exploration because we were so focused on the development. But you put out a couple of holes in May that were world-class. They made a lot of different lists, and they were some of the better grade versus width intersections that we've seen at the deposit. So I think it'd be nice just to highlight some of those holes from May and even some of the recent holes that you just put out at the South Austin zone. And it looks like South Austin is really turning into a beast of an area of the mine.
It absolutely is. I like to say South Austin is really gratifying for everybody who's working on Madsen because this is why we're here, right? We're here because there's a deposit at Madsen that's profitable to mine. But we're also here just as much as for what we know about. We're here for what we believe is there. And South Austin is feeding that, which is to say that, the Red Lake mine down the road has been operating for whatever it is, 70 years. And a good number, it's not the high proportion, but a significant proportion of those years were stellar because the mine found and then tapped into these pockets of especially high-grade mineralization around the edges of, or sometimes right in the middle of, or, of the deposit. And so South Austin is one of those at the Madsen Mine, this part of South Austin that we've been drilling into and delivering these. We started delivering really high grade results from South Austin even in February. And then there was another slew in March, and then there was a set in June, I think, and then we put out some just last week. And they're phenomenal drill results. They're really, really strong gold grades and over good widths as well. And interestingly, there's a lot of occurrence of visible gold, which is not common in lower grade. When I say lower grade, I mean average grade parts of Madsen. These areas of South Austin, we're seeing, a reasonable amount of visible gold. So this is why we're here. And so the two comments that I like to reinforce about South Austin are, this is why we're here, and we feel strongly that South Austin isn't going to be the only South Austin that we find, right? We have multiple other parts in and around the known deposit, some of them really close to where we're already working, where we see potential, where we have reason to believe that this kind of thing could develop in other places. And so we have some fairly near-term plans to test some of those, and then some longer-term plans to get at some of those zones. So we think that there's good chance of finding more pockets like South Austin in and around the Madsen deposit. And then the other comment that I like to make when discussing South Austin is we are planning to, start mining that mineralization likely before the end of the year. When we go through that very detailed mine plan that I described, a lot of the non-mining development work that happens between now and the end of October is driving tunnels so that we have mining access to that part of South Austin so that we can be monetizing that high grade discovery, that high grade lens, within the year from now. So that's really exciting to not only be intersecting these phenomenal grades of gold, but to know that we're going to be able to start mining that mineralization pretty soon. That's the kind of thing that gets you out of bed in the morning.
So what is the potential then of this South Austin zone in terms of changing your near term, but even more importantly, overall production outlook for this asset?
That is a very good question, Corey. I mean, I I talk about wanting to understand better the balance, the impact on grade of the balance of those two things, right? Incorporating more of the halo mineralization and finding more high grade in the areas that you mine. That's always the question in deposits like this. I think as you get into areas like this, obviously the introduction of additional high grade tips the balance in that favor. And again, I'll reference the Red Lake mine. I mean, there were quarters, months, years that just stood out in the history of that mine because they tapped into these areas, right? I mean, the high grade zone, they did not use a very clever name for that zone, but it certainly is plain. The high grade zone is what turned Goldcorp into Goldcorp, and it boosted the production at that mine from about 50,000 ounces a year to 500,000 ounces of gold a year over just a few years, like within just a few years when they found that high grade zone. Now, to be very clear, I am not saying that South Austin is going to do that for Madsen, but finding high grade pockets makes a difference. If you're still moving the same number of tons, but the grade in those tons increases notably because you've tapped into this kind of pocket, it makes a difference. And so, yeah, I say it gets you out of bed in the morning. It's really motivating to keep doing the work to get this mine up and running so that the geologists have the ability to go out and look for more of the kind of stuff that we're finding at South Austin.
Well, and Gwen, just to that point, when we've had Will on in the past, Will Robinson, the VP of Exploration, he's outlined that in addition to having the 8 zone at depth, which is known high grade, there's now the upper 8, there's MJ, there's North Venus, there's North Shore, and he even highlighted that Fork is an area where you have a deposit, and it would only take you a couple of months to drift over to it in a mining scenario. So the speed with which you can not just locate new potential ounces, but also mine them is what's stunning to me. So maybe just speak to the larger exploration program around Madsen, continuing now that once the revenues start coming in, you can put the gas pedal on to exploration again.
Yeah, I mean, Upper 8 is a discovery that we made in the middle, maybe even first half of 2024. I'm losing track of the dates now. It's an exciting discovery, right? 15 of 17 holes returned gold, and several of those hits were really high grade, including 22 grams in one, 44 grams in another. Those were really nice intercepts in a brand new discovery. This is when we took that different rock unit, the ultramafic rock unit that hosts the 8 zone, which is way down near the bottom of the known Madsen deposit. That 8 zone is uber high grade. It's a 20 gram per ton zone. And we think there's good chance of being able to find more 8 zone going to depth from 8 zone. But Will was like, well, what if I look up instead? So he followed that different rock unit, the ultramafic rocks, up dip towards surface and found where there was a structure that was parallel to the 8 zone that crossed it. And he drilled it and he discovered Upper 8. And I mean, that is a suggestion of the exploration potential on this property. I mean, there's been on and off work on this property for sure since the mine closed in the early 70s. But I would suggest that there hasn't yet been a team that's been into, I would suggest strongly, there hasn't been a team that's been into consistent cash flow and therefore has vision towards a long-lived operation and has a geology team that's focused on feeding that. And that really matters because there's a bunch of surface targets like that North Shore one that you mentioned. That one we're really excited about. It's just a kilometer to the northeast along strike. We've done holes in that area that look like Madsen. They didn't return the grade, but they sure look like Madsen. We have reason to believe, based on a subsequent soil sampling program, that the target is shifted like 200 meters to the west. And so that's a really exciting target. And we are down in the guts of this thing, right? The guts of the Madsen deposit as we know it. And when you're down in a deposit and you can look around and explore from depth, you have all kinds of opportunity to test targets that you don't have when you're trying to work from surface, which is where most of our predecessor companies were trying to do their exploration from. So The exploration opportunity here is big. I mean, Will, to his credit, he obviously is in charge of production geology as well, alongside our chief mine site geologist, Jill. But on his exploration excitement, he's had to sit on his hands a little bit over the last 18 months, as we obviously have focused on getting the mine up and running. But he has targets at the ready, and we're excited to go out and see what we can make of those.
When we take a look at the big picture exploration here, look, this project, let's face it, has quite the history, and it's had quite the amount of positive, very good drill results from it. But because of the history of mining at this asset, when you're drilling off these new targets and you're making new discoveries and you're expanding on those discoveries and de-risking them, how confident do you think you as a team need to be, and how much drilling needs to happen before you can confidently incorporate some of these new targets into an actual mine plan?
Oh, that's an interesting question. Yeah. So, I mean, there's two kinds of mine plans, right? So there's the official mine plan, that's the public facing document. So for us, that's our pre-feasibility study. And then there's the internal document. And the longer a mine operates, the more the internal document is really the only pertinent one, because the public facing document, like an operating mine, doesn't continue to publish feasibility studies over its mine life. And so the internal one becomes more and more the one that matters. And so each company has to create its own requirements. And those really originate with your geology engineering workflow. So for us, there's a whole workflow that starts with geologic confidence and data, and then flows from there in a matrix. And that matrix produces a ranking of targets, and those targets all have probability, like have confidences on them, have requirements against them, have costs around them, have development meterages that are needed associated with them. So it's not a simple listing as you suggest with this question. But at the end of the day, you have to incorporate all of those factors. So take the Fork deposit that Chad just mentioned there. So Fork is right beside the Madsen Mine. Like it's near surface. It's only about 250 meters. The edge of it is only about 250 meters west of McVeigh, which is sort of the western part of the deposit. And Fork was a little bit ignored by both the prior operator and initially by us, because it's lower grade relative to the rest of the mineralization around. It's only just over 5 gram per ton deposit. Will took another look at that data. He reanalyzed it. He recognized a core to that deposit where he sees an average of 8 to 9 grams per ton with some good consistency, continuity. And so now his next step, based on that whole matrix, is to do I think it's a 2,000 meter, and I apologize if I get that number wrong, Will. I think it's a 2,000 meter surface drill program, because this one happens to be right at surface, to add some pieces of data that are currently missing that would, if successful, then move that into a development decision. And that would mean spending probably 2 months driving a 250 meter tunnel over from pretty close to the west portal over to the Fork deposit. And then you would be able to start doing the final phase of drilling, which is to pull it right into that 7 meter spaced drilling from underground. And then you'd be ready to start mining. So then it would be essentially in the mine plan, one of the pieces that's getting the tighter space drilling before final mine design. So there's a process for all of them. There's a matrix of information and a process for all of them.
Well, Gwen, if that wasn't enough to have all this exploration upside and the potential of moving Fork into a development scenario and discoveries happening at surface and at depth, you also have a whole other deposit that we haven't even talked about, and I think a lot of people have forgotten about because you haven't put out a lot of news and a lot of noise on it. But then in July, on the 10th, you did do an update at your Rowan deposit, and you put out a PEA here, the preliminary economic assessment. And this is a whole satellite deposit that the prior two operators didn't have that can feed the future by way of this satellite deposit. So walk us through the PEA that you put out at Rowan and the significance of this other deposit.
Yeah, for sure. No, Rowan's exciting, and we hadn't talked about it, largely because we were completely focused on Madsen. But in the background, we were chugging away at Rowan. We initially did some drilling there, and then that led to restating the resource into a form that we were really confident in. Our geologist, Will, needed to get his stamp on that resource and know that he was confident with it. And then once Will saw that resource, he's like, this looks pretty mineable. Let's scope this out. Let's see what it looks like on a scoping study level. So we got consultants to do an initial, a scoping level mine plan on it. And that looked nice enough that we're like, we should turn this into a PEA and make sure that we move this along. And so that's what we did. And we didn't talk about it a lot because there wasn't a lot to say until it came out. But yeah, Rowan is 80 kilometers away by road. It's only about 30 kilometers away from Madsen in a straight line. To drive, you got to go up and around the end of Red Lake. So 80 kilometers away by road. It would be an underground mine, but it's a deposit that's really nicely shaped for mining. So mineralization starts right at surface. It's essentially vertical in a panel that's quite wide, and the mineralization in the areas that we've defined it so far is pretty continuous. So those are all the things that you want: steep, wide, continuous, and starts at surface. So then you don't have to develop a long way down to get started. And so those factors really helped generate a mine plan with a really strong return. I mean, the after-tax IRR on this mine that we've planned at Rowan is like 42%. And that's because the deposit's nicely shaped for mining, and this would be a toll milling operation. So we would not build a mill up at Rowan. We would not build a tailings facility up at Rowan. We would build an underground mine and a water treatment, like a polishing pond for where the water that comes out of the mine sits, and then a water treatment facility, because those are the things that you certainly need to operate an underground mine. And then the mineralization from there would get trucked to another mill for processing. And so to get that mine built and running would only cost $70 million. And that would set up a mine producing over 35,000 ounces of gold a year. So not a tiny amount. A nice addition to West Red Lake, already producing something like 65,000 ounces a year at Madsen. And I'll note that even the pre-feasibility study mine plan has our ounce count rising, especially in years 3 and 4 as we get deeper into the mine. So yeah, it's a nice addition to West Red Lake's production profile in the region. And sure, it's only a 5-year mine life at Rowan, but that's because we haven't actually done any work to try and expand that deposit. We've just worked on what is, and Will has a very clear plan for a 3,000 meter surface drill program that he would love to do at Rowan that fills in a few key gaps within the resource that he believes success on those holes has good potential to, add some nice tons to the resource as is. That's just the nature of infill. And then he's got, some nice targets around the edges, a little bit down plunge, one that's a little bit to the east. So we see a lot of potential for Rowan to be even more than what it is. But what it is generated a really nice mine plan already. And then the next question is often sort of timing. Certainly Rowan needs to go through a permitting process. And so our focus internally is to progress Rowan to the next stage of planning, like a PFS level of planning, hopefully next year. That, as much as anything, is so that we answer the engineering questions about things like the water treatment plant that are needed for a mine build application. And it's interesting that in Ontario these days, there's Bill C5, where they're trying to create a more streamlined permitting process for projects of this nature. We shall see the impact that has, but we're optimistic based on not even incorporating Bill C5, any expedition, but just based on similar projects in Ontario in recent years, that we could maybe be mining at Rowan by the end of 2027. So breaking ground at Rowan by the end of 2027. So that's part of building scale at Madsen. We believe that there's an opportunity to create a mine at Madsen that's got some real scale to it, and Rowan's now potentially part of that picture.
Yeah, I think it was just worth highlighting because I rarely hear it discussed when people are breaking down the valuation of the company. And if you had that just in a tiny junior company, it would definitely be worth something more. And right now, I don't think you're getting any credit for it. So just another value kicker, and the potential to be 2 different mines as a company in the very near term. 2027 in mining terms feels like it's right around the corner because a lot of these projects are 10 to 15 years out. So it's not that far out. It's actually a medium-term opportunity for the company to expand the production profile, but definitely a lot going on at the main gig at Madsen. Lots going on underground, lots going on with exploration, still in the ramp-up phase, waiting on some of that equipment, but definitely making progress. Keep us posted, Gwen. We'll get you back on for an update soon. And for those of you listening in, if you want to stay abreast of all the news, definitely click on the link down in the show notes. It takes you right over to the West Red Lake Gold Mines website. straight to their news section where you can sign up for updates, have them hit your email inbox, or just follow along with the news as it drops. There's going to be plenty of it. And as always, Gwen, looking forward to our next conversation.
Likewise, guys. Thank you so much.